What's going on, Good Eats family? Today we're coming back with another video, and in this video we're talking about reversal market profiles. Once we consider the interbank order flow on the daily, you need to know what the profile you're in, whether it's a sell or buy model. Every market has a different profile in which it trades in. So each profile is going to have its own signatures, you feel me? So today we're going to be focusing on reversal market programs, okay? Regarding market structure and reversal market profiles, you have to understand that price moves from swing point to another swing point, and every swing point has an equal counter swing it's unfolding, attempting to fulfill the overall direction. So what goes up must come down and then goes back up. Those are higher lows. What goes down comes back up to make a lower low. There's going to be times where we're going up, we reach a peak climax, key level on the higher time frame, and then we'll find ourselves in a situation where potential swing high is forming. So what we're going to do today is we're going to go on to the daily time frame, and I'm going to show you how we anticipate potential market reversal programs unfolding, and then I'm going to show you how we trade it on the intraday time frames. Let's go. All right, fam, here we are on the daily time frame, and in today's example, I'm going to show you how reversals unfold. Okay, one thing I want to mention to you: when you see yourself inching into a premium, we've been buying for a while, you don't want to just say, yeah, I know for sure it's going to be a swing high, and I know for sure after that swing high it's just going to tank the market. Reversals do not have to fully turn the market into a complete opposite direction. It could be a reversal market program for the day, and it could just run for another day or two, and then it can continue in its trend. Okay, a lot of the time people think that reversals mean major moves on the daily. Sometimes they are, okay, but in today's example, what I'm going to try to show you is how we trade as day traders within the market profile of a reversal. Okay, so that means we're focusing on that day. We're not focusing on the week, because weekly reversal profiles are a lot different than daily. So let's just remember, reversals are traded off of liquidity graphs in the power of 3, which is accumulation, manipulation, and distribution. Okay, we'll typically see liquidity clearances above and below the marketplace. This is in order to take out early buyers and sellers. Okay, then the market will pick a side, and as the day trader, we enter off the next candle after a swing higher or swing low forms. Okay, it's all about having patience, waiting for price to get to its desired level before we see displacement in the marketplace. So let's take a look at the example here we have on the daily. So what we have is price has been in an uptrend. And as we know, in order for it to be a trending market to the upside, we have to see higher lows and higher highs. And this market has been doing so. But at what point do we anticipate potential reversal? Well, let's take a look here. We're in a deep premium of this price leg to the downside. And when we get to these deep premiums, we have to start looking at the candlestick. There's a little bit of a candlestick analysis and understanding, well, this candle closed very weak at the mean threshold of this bearish order block. So let's take a look at this bearish order block. As you can see, price failed to close inside of the mean threshold of this bearish order block. So I would be anticipating a reversal market profile for the next day. Okay, so I want you to see the candle and look at that candle, and I want you to study that candle. Okay, you see the weakness to the upside, you see the very bearish close below the body of this candle right here. This swing high is showing very clear intention that, well, we should have another bearish day following that. And that's what we're going to be focusing on. So now that you understand what it looks like on the daily, I want to go down to the intraday and let's talk about how we enter these trades and what we look for. Okay? All right, let's take a look at the price action here on this day. And as you know, from the daily, we're now on the 15-minute time frame. I think it's really easy to see all of the moves that the market makers hand out, on the 15-minute time frame. Depending on the type of trader you choose to be, you'll be seeing things differently. But I always go back to the 15-minute time frame to manage trades and to see the overall, outlook on the day, because we understand that the 1 hour is where we are finding our points of interest based off of the daily time frame, but the 15-minute is where we manage and where we enter off of as day traders. So the first thing I want you guys to notice on this day is the overall pattern that we see for the day. This is your typical London swing to the upside, right? and then you get this New York / London close reversal. So if we look here, from the open here, we open, we come down, this right here is London's low, and we make a high into New York session. 8:30 in the morning, we are making a swing high. And then we get an immediate decline all the way down from New York open into London close. Okay? I'm not concerned about this pullback here. What I'm looking at is primarily the fact that price closes here. Okay, so if I remove the candles, this is what that day looks like. Okay, it's not going to always be perfect. Sometimes it'll look like this. You know, it doesn't always have to be a perfect swing. Okay, now mind you, this isn't its most basic form. There's times where we can have something like this one. Stays open, comes down, makes a higher low, boom. You get a little smart money reversal here, and then closes like that. Ultimately, what I want you to focus on is the midnight open, the low made in London, and the high established in New York, and the low established by 12 p.m. Because remember, from 12 to 12 is what we're looking at. This is where the interbank algorithm is running and giving you the expansion of the day. And as day traders, that's what we're looking for. All right, so let's move forward and take a look at this. I want to go through this very quickly for you. So we have the Asian range. What happens after midnight? There's midnight price open right here, and then we drop down. Now I want you to know that when this drop down, notice it's only 20 pips. It only dropped down 20 pips. We run the stops below Asian low. We run those sell stops. All right. And as you can see, swing high formed here. Swing low formed here. This is the range. So for you being a London trader, you're looking at this dealing range. If price breaks above this high, then you know that you're looking for a retest of this area here to continue going long. It's very simple, guys, okay? There's other things that we can show you on how to enter down here, but today it's just about understanding the market profile. We already know on the daily we've reached the resistance point on previous day. So today we're just expecting a swing high to actually form. So that is the dealing range. We have the retest here, fair value gap, and we have the high of the bullish order block. This is the high probability low risk entry, right? Then we continue higher, next swing low here. I want to highlight this. This is pre-New York swing low. Now by New York, we see this swing high here. So the same thing that I did before with these two areas is what I want you to look at here. If we make a swing high and we break down below this low here, that's a break of structure, and we would be looking for shorts back down to this low. It's very simple how we use the reversal profile to understand what our target areas are based on the ranges we see. So when you're trading a reversal market profile, you need to be looking at the major swing points. This swing point from this high to this low, right? This is 230 and this is 430. From this low to this high, we have another swing point. Well, you might be saying, well, why aren't you looking at this? Because this swing low here is within this dealing range. Okay, I'm looking at this area here. When we break structure, what we're looking at is this becomes a breaker block. And that's your low risk entry, right? Any retest of that level. And you take it down all the way to the sell stops. This is your take profit. Okay, very simple. And the rest of the day, we'll just consolidate off because that's how reversal profiles work. Okay, I want you to look at this. I've put very minimal amount of work into showing you the things we're looking for. All right, and I did this based on swing points. If we did this based on liquidity, I would literally be looking at the same stuff, but I wouldn't be highlighting swing points. I'd be looking at equal highs and equal lows. If I was basing this off of the arrays, I would be looking at what type of order blocks are forming at the highs and lows of the day. Okay, I pointed out a bearish breaker and I pointed out a bullish order block and an institutional order flow entry drill in this area. But that's beyond the scope of this video. The point is to understand how to trade these market profiles. You can't get stuck on buys because London bought. If it breaks structure and it's showing willingness and there's sell stops intact, you know that price is trading lower. It's that simple, guys. All right. So if you found value in this video, please take some time to review it before going on to the next one, because we're going to continue with more market reversal profiles. I'll catch you on the next one.